Go ahead and take on this fast track classes. Get started. And I'm going to start with two chapters that is in tandem together. That is chapter number 6 on cost sheet and chapter number 9 on job costing. Is that fine?
Yes, sir.
So I don't see any distinction between cost sheet and job costing, because in both you are supposed to make a statement of cost and then add a profit and to get the sales or the selling price of a particular job or a work order. Okay. Now people ask me, should I memorize any format for a cost sheet? So I will not suggest you to memorize any format for a cost sheet as such. I will tell you for what kind of sums you need the format anyways. Okay. And this particular subject, it is going to be a blend, a mix of both your, you have to memorize certain equations, and also you have to use your common sense. Is that fine? Both. It is a blend of something called the rote learning, ROTE, rote learning, and understanding the concepts. Is that fine? Okay. Now, what should we know whenever you prepare a cost sheet? I'll tell you what are the terms you should know. So, make a note of it in your notebook, guys. Just write down this. First, write this. It is direct materials. Direct materials. Okay, plus direct labor, or say direct wages, it's all the same, direct labor cost. Direct materials plus direct labor or direct wages plus your direct expenses, all put together. What is it called? It is called prime cost. I repeat, what is it called? Prime cost. For example, I will tell you. Now, let us say we are a company manufacturing shirts. Okay. So, we need direct materials. What is that? We need cloth, we need the buttons, we need the thread, right?
Yes.
All these are what? All these are direct materials that are used in manufacturing the shirt. Is that fine?
Yes, sir.
Then I employ a tailor to make the shirts. So I pay the tailor rupees or whatever X amount for making one shirt. What is that called? Direct labor or direct wages. And that is wages or compensation paid to laborers for manufacturing the product. Is that fine?
Yes, sir.
So, what about direct expenses? For example, let us say that there is a machine that has been taken on rent to make 1,000 shirts. So, the rent I pay for the machine, is for this particular job of making 1,000 shirts. Is that fine? Yes. So, that is an example of a direct expense, right? So, all these are costs that are direct, or you can say prime cost. You should know this term. Is that fine?
Yes, sir.
Then you should know this also. To the prime cost, make a note. Prime cost plus, what is that? Factory overheads. Remember, factory overheads is also known as what? What is that? Production overheads or works overheads. So, why is the works? Workshop. Is that fine? His works, overheads, nothing but, keep it simple, production overheads. And these overheads are also known as, what is that? Indirect manufacturing cost. What is that? Indirect manufacturing cost. So do know this, your prime cost plus your factory overheads will give you what? Something called the factory cost, also known as what? Works cost. I repeat, your prime cost plus your factory overheads equals what? Works cost or factory cost. Is that fine?
Yes, sir.
You should know this. Then one more point. To the factory cost, to that add, right, as selling, it is selling, distribution and administrative overheads. If you add the selling, distribution and office or admin overheads, what do you get? You get the total cost. Is that clear?
Yes, sir.
Please remember, I am giving the format for a cost sheet when there are no stocks. No stock of finished goods and no stock of work in progress, nothing. Is that fine?
Yes, sir.
So to the factory cost, you add your selling overheads, admin overheads. What do you get? Total cost. Also known as what? Cost of sales. Is that clear?
Yes.
Now, please remember, the selling, administrative and distribution overheads and what? All these are non-manufacturing cost. Yes or no? These are indirect non-manufacturing cost. You know, it's a very popular phrase in the US. They call these expenses what? Something called the S, G, and A expense. You know what S stands for? Selling. And G stands for general. Okay, general. And A stands for administrative expense. Is that fine?
Yes, sir.
So these expenses are known as what? Are indirect or non-manufacturing cost. So if you add this to your factory cost, what do you get? Total cost. You just have to know this. These are the three terms you have to know. What is the meaning of prime cost? And then the meaning of factory cost or works cost, number 2. And number 3, the total cost. Is that clear?
Yes.
Okay. And I will tell you later when you should learn the format of a cost sheet. But as such, cost sheet, nothing but what? It is a statement in which you're going to put down all the costs. You're going to plot or you're going to write down all the cost and find the total cost, add any profit you want to make, and you get what? Sales or selling price. Is that clear?
Yes.
That is all. So now we shall go ahead and take on the first sum for this topic. Okay. Remember, no distinction. Cost sheet is chapter number 6 in your study mat. Job costing chapter 9. Okay.
Yes.
It is 6. And then what? 9. The ulta of that is what? 9. Fine.
Yes, sir.
So therefore, please remember, these two chapters can be studied together in your, even while preparing for the examination. Now let us go ahead and take on. I got some 14 examples, these two chapters put together. Okay, that will be done across 2 days. That is today and tomorrow. And if you're really thorough with these sums and understood the concepts, you should be able to tackle any sum on job costing and cost sheet. Now let us go ahead and take on the first sum that is there on the screen. Okay. Yes, Renuka, read the question for us.
In respect of factory, the following figures have been obtained for the year 1994. Cost of material rupees 6 lakh, direct wages rupees 5 lakh, factory overhead rupees 3 lakh, Administrative overhead rupees 3,36,000. Selling overhead rupees 2,24,000. Distribution overhead rupees 1,40,000 and profit 4,20,000.
So these are the numbers given for the year 1994. They given the information for the year 1994. Next.
Cost of material rupees, a work order has been executed in 1995 and the following expenses have been incurred.
These are the expenses incurred on a particular job. That's a work order for a particular customer. And what is the amount you're going to spend on materials?
8,000 rupees.
And how much on labor?
5,000.
5,000. Next.
Assuming that in 1995, the rate of factory overheads has increased by 20%.
Okay.
Distribution overhead have gone down by 10%. And selling and administrative overhead has each gone up by 1 by 2%.
There is an inflation in the amount of expenditure in factory overheads, in selling overheads and admin overheads, whereas a distribution cost has gone down by 10%, right?
Yes, sir.
Next.
At what price should the product be sold so as to earn the same rate of profit on the selling price as in 1994?
You saw the question is you have been asked to find the price. What is a selling price to be fixed for this particular job in the year 1995? In case your company wants to make the same rate of, not same amount, same rate of profit on sales as earned in the year 1994. These are the kind of sums that asked in the examination. Don't expect a simple cost sheet. Is that fine?
Yes, sir.
So these are the kind of sums you'll get in the examination. And people, remember, you have to use your common sense. Okay. Now, how do you go about this exam? There's some more information given?
Yeah, one note is given. Factory overhead is based on direct wages, while all other overheads are based on factory cost.
People are asking, why has he given this information? Because if you notice, they haven't given the amount of factory overheads and amount of selling overheads for the year 1995. You saw they didn't give the factory overhead, admin overhead for the year 95.
Yes.
They give only two numbers. What is that? Amount spent on material for the job, 8,000. And wages how much?
5,000.
Exactly. That's why it's given what? It is given that the factory overheads are recovered, are absorbed on direct wages, and all other overheads on works cost. On works cost. That's what is given. Not works cost. Nothing but factory cost. Now, the indication is given very clearly how the overheads are recovered. Why recovery? Why absorbed? Because all these costs will be recovered from whom? From the customers anyway, right? When you fix the price, how do you fix the price? The total cost, add profit, you get what? Selling price. So now, how to go about this example? First, you are supposed to make a cost sheet for the year 1994. Refer to the solution. We can solve in 3 steps. Okay?
Yes, sir.
I will discuss step number 1 and 2. Then I want people watching the video and also in the class. Okay? I'll pause after step number 2. Please work out, okay, step number 1 and 2 in your notebook. And then I will take up step number 3, that is for the year 1995. Okay?
Yes, sir.
Now, please refer to step 1. What is that?
Statement of cost and profit for the year 1994.
For the year 94, I'm going to make a cost sheet, a simple cost sheet. Simple. No stocks, nothing. Just see. Direct.
Material 6 lakh.
It is 6 lakh rupees I take. And then direct.
Wages 5 lakh.
I take 5 lakh.
Prime cost 11 lakh.
There is no direct expense. So prime cost 11 lakh. And then add factory overheads.
3 lakh.
3 lakh rupees. And I get?
Factory cost 14 lakh.
You say factory cost or works cost. is all the same. No problem at all. Nothing will happen. But remember, that is a factory cost or works cost, which is 14 lakh rupees. Now you will add what? All the
non-manufacturing.
exactly all your indirect but non-manufacturing costs. That is all your selling, general, administrative, distribution overheads. Is that fine?
Yes.
Administrative overheads, how much?
3,36,000.
These are office overheads, no? How much? 3 lakh?
36,000.
And then next?
Selling overhead 2,24,000.
Next?
Distribution overhead 1,40,000.
Add up all the three numbers
Uh,
to the factory cost.
yes.
Right? What is the total you get?
We get 21 lakh.
That is your total cost. Is that fine?
Yes, sir.
Now, after getting the total cost, to this add what?
Profit.
The profit you made in the year 1994, how much is given?
4,20,000.
4,20,000 is the profit you made. Therefore, sales 25,20,000. Is that fine?
Yes, sir.
That means what? You sold the goods you produced in the year 1994 for how much? 25,20,000. Now, that is step number 1, okay?
Yes, sir.
Now, step number 2, I am going to calculate the overhead recovery rates. I use our recovery because I am going to recover all these costs from the customer. Yes or no? The overheads are recovered. Okay? Overheads are absorbed into the product, added to the cost of the product. Okay? So that I can recover the money from whom? From the customer. Very clearly given that the factory overheads are what? Are absorbed or recovered on direct wages, right? So we know based on 1994 data, what is the amount of factory overheads? 3 lakh. What is the direct wages? 5 lakh.
5 lakh.
So 3 lakh upon 5 lakh into 100. How much?
60%.
What is the meaning? That means I can say the factory overheads are 60% of direct wages. What is the meaning? For every 1 rupee of wages,
60 paise.
60 paise is my overhead. 60% of 1 rupee, right? 60 paise. That is the meaning. And I will tell you after this sum, why always there is a link between factory overheads and direct wages. What is the link? I will tell you. Just let's complete the solution. And I will tell the link between why factory overheads are almost always or most often, they are recovered as a percentage of direct wages. What is the link? I will tell you. Okay, what is the idea behind it? What is the concept? So right now, let's follow the wording given the question. Factory overheads based on what? Direct wages. Done?
Yes, sir.
Then next what? All other overheads based on what? Based on factory cost or works cost. Is that fine? Now what is the next one?
Admin overhead recovery rate.
I will take 3,36,000 rupees, what we got, right? What we have in 94, divided by 14 lakh rupees into 100. How much?
24%.
24%. That means what? Your office or admin overheads will be 24% of, that is on factory cost. You can apply the percentage on factory cost. Is that fine? Then next,
Selling overhead.
I will divide
2,24,000
upon
divided
14
by
lakh into 100. How much?
16%.
16% of factory cost. Next,
Distribution overhead 1,40,000 divided by
14 lakh
into 100,
rupees,
10%.
10%. Then next,
That's it.
step number 2 is over.
Yeah.
So guys, you pause the recording and take down step number 1 and 2 in your notebook. Okay?
Yes.
Okay, so now we shall go ahead and take on working note 3 and 4. And people are surprised. I will mark even the solution as what? As a working note. Is that fine? So these can be written as steps 1, 2, 3, 4. Or you write as workings 1, 2, 3, 4. Right? Your working note number 4 is actually the solution. But that doesn't matter. No problem at all. You will get marks in the examination. You can write as working note 1, 2, 3, 4 or step number 1, 2, 0.34. Is that clear?
Yes, sir.
Now I'll go to working 3. What is that?
Calculation of percentage of target profit.
What is the target profit you want to earn? It's given, no?
Yeah.
The same profit as a percentage on sales in the previous year. Now tell me, 94, in the year 94, what is the profit made? 4,20,000. And what is the sales? 25,20,000. So what is 4,20,000 upon 25,20,000 into 100? It will work out as 16.67%. Guys, if you want, you can also calculate the profit as a percentage on what? On cost. Example, 4,20,000 upon 21 lakh cost, the total cost, into 100. How much? 20%. Is that clear?
Yes, sir.
Yes. Remember, in fact, finding out the percentage on cost is more, it's better. I shouldn't say more better, okay? It's better because here in the next step, we're going to have the total cost anyway. I need anyway the profit as a percentage of what? Cost. And you all know this. It is 16.2/3% on sales is what? That is 1/6 on sales is 1/5 on cost. I will explain that also later, okay, when it is required in a sum. But here remember, if I want, I can calculate the profit on cost, which is 4,20,000 upon 21 lakh into 100. How much? 20% on cost. If you want, make a note of it. Fine.
Yes, sir.
And I'll go to working note number 4, where I'm supposed to find the price for this particular job that we're going to take up for a customer. Because you have been asked to fix the selling price. And refer to the next step. Yes, my statement of
Calculation of selling price for job in the year 1995.
nothing but your cost and profit for the year 1995 for this particular job or the work order. Okay. So, how much are you going to spend on raw materials?
8,000.
Very good. And how much on direct wages or labor?
5,000.
Adding both, what is the prime cost?
13,000.
Till that it's fine.
Yeah.
Now add a factory overheads will be, we know from working note number 2, factory overheads are incurred at the rate of 60% on wages. Now what is the wages for this particular job? 5,000 rupees. On that, what is 60%?
3,000.
Should be 3,000, right? But it's given in the question that the rate or the amount of factory overheads has increased by how much percent?
20%.
20% inflation. So what do you do? 20% on
3,000.
3,000, how much?
600.
600. Adding both 3,000,
600.
600. You know what people do the mistake? They got 60% right in working note 2.
Yes, sir.
To that they'll add what? 60 plus 20. They'll take 80%. That is wrong because it's given what? The rate of factory overheads has gone up by how much? 20%. Got it?
Yes.
That means first, what is 20% or 60%? Can you do that on the screen, Renuka? Just work it out, no? What is 60% into 20 by 100 is around 12%. Okay? 12%.
Yeah.
We know that the factory overheads are 60% of wages, right?
Yeah.
On that 20% increase means what? 20% 60 is 12% extra. Adding both how much? You know, 72%.
2%.
Now I can say that my factory overheads are 72% of direct wages after inflation. If you apply 5,000 rupees into 72 by 100, you know how much you'll get? 3,600 directly. But I will advise don't do that. What do you do? Find the factory overheads based on the percentage recovery, what you got in working note 2. Then apply the inflation on that amount. Is that fine?
Yes, sir.
3,000 plus 20% on that 600, in all 3,600 outer column. So what is your factory cost or works cost?
16,600.
Very good. Now add what? All your non-manufacturing overheads. Under that, what is the first item?
Admin overhead,
Which is 24% on?
factory cost.
Exactly. 24% on 16,600. How much you get?
3,984.
Very good. To that what?
Increase.
Add. To that you add
12.5%.
12.5%. How much?
498.
Add both. Total?
4,482.
Very good. Next, selling overheads.
16% of factory overhead.
Exactly. How much?
2,656.
Very good. And then to that, add another 12.5% on that. How much?
So increase is 12.5%, 332.
Add both outer column.
2,988.
Very good. And then next,
Distribution overhead,
which is 10% of 16,600. 1,660. And what a coincidence.
is decrease.
There is a 10% decrease. Don't get it. That's 10% on factory cost. Now this amount has gone down by 10%. That is
66.
166 down minus, what is the net amount?
1,494.
That's it. Then add up all these numbers to your factory cost. What is the total cost?
25,564.
And then to this add what is the target profit? 20% on cost. Yes or no? So you can apply 20% on how much?
25,564.
How much you get? 5,000?
112.8.
That is a profit expected or profit desired or target profit. Add both. What do you get?
Sales 30,676.8.
That means you have to inform the customer that he has to pay how much for the job? Rupees 30,000?
677.
Very good. Now what you do? Do one small calculation for me. Okay, do this calculation. What is the profit? 5,000?
112.8.
Divided by what is the sales you got selling price? 30,000?
30,677.
Into 100. If you do that, you will get 16.67%. The same profit percentage on sales as earned in the previous year, 1994. Is that fine?
Yes.
Got it? So guys, go ahead, pause the recording and complete working note 3 and 4. And that is all with the solution.
Yes.
Okay, so guys, let us go ahead and take on the next example. Before I take on the next sum, as I promised, I'll explain why there is a link between factory, overheads and direct wages. Okay. Now think of an academy running classes. Let us say the academy pays rupees 1,500 per hour to the faculty. Now what is that? I can say it is a direct wages or direct labor cost that is incurred by the academy for a particular batch or a job. Is that fine?
Yes, sir.
And as a faculty is taking class, remember the lights are burning. Yes or no? The lights are on. And then the AC is running in the same place. Yes or no? And then the chairs on which the students are sitting is getting what? Depreciated. And then also the academy pays a rent for the space where the classes are conducted. And suppose a teacher is using what? A projector, even that is consuming what? Electricity, right? So lights, AC, and then the projector, all these consume what? Electricity. And then the rent for the space and depreciation on the chair, all these are what? Factory overheads. Oh, it's factory. The classroom is a factory where we produce chartered accountants. Yes or no?
Yes, sir.
It's a factory overhead. Now let us say I pay rupees 1,500 to the faculty for every hour they teach. But as they are teaching, I am incurring what? All these overheads. Let's say rupees 300 per hour. My cost of electricity per hour, rent per hour, also depreciation on my assets per hour. Now all put together rupees 300 per hour. Now tell me what is 300 rupees upon 1500 into 100? That means I can say my overheads are what? 20% of wages. Yes or no? As the teacher is taking class, I am incurring all these overheads. That is why if they take more hours, what? I incur more factory overheads. Why? More consumption of electricity. I'll be incurring what? If I'm going to take the class, the space on rent on a per hour basis, I pay more rent for every hour, right?
Yes.
And more the asset gets depreciated. Is that clear?
Yes.
So therefore, that is a link between what? Factory overheads and direct wages. Is that clear?
Yes.
Very popular relationship. Factory overheads will vary with direct wages. Suppose a factory is all automated. Let us say instead of me, there is a robot sitting here and teaching you. That means what? Even the robot is going to consume what?
Electricity.
Therefore what? It's all, I can say the factory overheads driven by not labor, based on what? Machine hours. Is that clear? And you learn all this along the way, don't bother. So now, please remember, one popular link is what? Factory overheads and direct wages. Is that clear?
Yes, sir.
So now we shall go ahead and take on the next example. This particular sum, it's a very old examination question, somewhere in 2010 CA inter-examination question. Okay.
Yes, sir.
And all these sums are questioned in the exam even now, but people wouldn't have come across this sum. So let us go ahead and take on this example. Yes, Renuka, read the question for us.
Maximum production capacity of JK Limited is 5,20,000 units per annum. Now, details of estimated cost of production are as follows. Direct material rupees 15 per unit. Direct wages 9 rupees per unit, subject to a minimum of 2,50,000 per month.
Point to note. It is given that what is the amount you're going to spend on material? 15 rupees per unit. And what about labor? Rupees 9 for every unit produced by the workers, but subject to what? Minimum of 2,50,000 per month. That means what? The wages paid to workers should not fall below what? 2,50,000 a month. Next.
Fixed overhead 9,60,000 per annum.
Okay.
Variable overhead 8 rupees per unit. Semi-variable overhead are rupees 5,60,000 per annum up to 50% capacity, and additional 1,50,000 per annum for every 25% increase in capacity or a part of it.
Okay. Now people have a doubt. So what happened to factory office selling overhead? They go in something called fixed variable and semi-variable. See, remember, the overheads incurred can be classified based on the function. What is function? Factory overhead. That is a production function, right? Administrative overhead. That is office overheads. The administrative function. And then a selling overhead, the marketing function, right?
Yes.
So that is based on function. But here what? The overheads have been classified based on the cost behavior. What is behavior? There are certain overheads that are fixed. Doesn't matter how many units are produced. Example, the rent you pay for the factory. Doesn't matter how many units are produced in the factory. Got it?
Yes, sir.
It is going to be how much? 9,60,000 per annum. And what is a variable overhead? Example, what is that? Power consumption, right? Depends on number of units produced, which is rupees how much? Rupees 8 per unit. Also, they given something called the step cost. No, that is the right wording. What is that? STEP, step cost. Because they are given, even though you can say semi-variable, it is actually step cost. Why? Up to, it is going to be 5 lakh, how much? 60,000. Up to how much? Up to 50% capacity. Suppose you want to work at more than 50% of the capacity, but up to 75%, the next 25%, what is the cost? Extra 1 lakh 50,000. And suppose they are going to operate at more than 75% capacity and goes up to 100%, another 25% jump. How much? Another 1 lakh and 50,000. So what is it given? Or part of it. Why? Because even if you work at 51% capacity, 1% more than 50 watt, you'll be incurring all the 1,50,000 extra cost. Is that fine?
Yes.
In fact, a better description of this cost, what? Something called the step cost. Why? Up to 50% capacity, 5,60,000. A straight line, 5,60,000. Thereafter, what? It increased by how much? Another 1,50,000 goes up and stays there for the next 25% capacity. Is that fine?
Yes, sir.
Therefore, please remember, in this example, the overheads have been what? Classified based on cost, behavior, how they're going to behave. Either fixed, variable, or semi-variable. Part fixed and part variable. But here is a better description of this is what? Step cost. You know what is the exact example of a semi-variable overhead? The right example. Example what? The telephone rent we used to pay in those days, you know, fixed line, not your mobile phone, okay? We pay a fixed amount of rent plus what? Based on number of calls we make. Even electricity, another example, what? We had to pay a minimum rent for using the meter rent, plus what? Based on number of units of electricity consumed. Is that clear?
Yes.
Those are good examples of semi-variable. But here's a step cost. Because up to 50%, so much, beyond that it will increase. Fine?
Yes, sir.
Next.
JK Limited worked at 60% capacity for the first 3 months.
That means what? You come between 50 and 75%, right? 60% during the first?
During the 3 months of the year starting from 2013 to 14.
Okay.
But it is expected to work at 90% capacity for the remaining 9 months.
That means what? We are already done with April, May and June 2000. The year is 2013-14, right?
Yeah.
So let's say 1/4/13 and the year ends on 31/3/14. So April, May, June already over. In the first 3 months, the factory worked at what rate? At 60% of its capacity. And you are planning to work at what rate? At 90% capacity for the next 9 months. That is July to March. Is that fine?
Yes.
In this example, it is 3 months, 60%, and the next 9 months, you are planning to work at what percent?
90.
At 90% capacity. Then,
the selling price per unit was 44 rupees during the first 3 months.
okay, next.
And you are required, what selling price per unit should be fixed for the remaining 9 months to yield a total profit of 15,62,500 for the whole year.
You know what is the meaning? That means what? Now we are going to prepare a cost sheet for the first 3 months and also for the next 9 months. The question is what? What should be the selling price for the next 9 months output? What is the meaning? That means we are going to prepare a cost sheet on June 30th for the 3 months already over and 9 months yet to come. That is why, what is the price you have to fix for the next 9 months? Is that clear?
Yes.
And what is the total profit you want to make?
15
In all, 15,62,000 is a profit. Please remember, in this example, you have been asked to fix the selling price for the next 9 months output. 3 months already over. And we sold the units at what rate? At 44 rupees per unit. Right? At 44. And you have been asked to fix the price for the next 9 months output. So how do you go about this example? Here I'll tell you the trick is, how do you tackle direct wages and how do you tackle the semi-variable overheads? Is that clear?
Yes, sir.
Got it? Here we go. Refer to the working note first. In the working note, let's make a small working note for, what is that?
The
Semi-variable or step cost. The semi-variable overheads. What is that? For the first 3 months, the company operates at 60% of its capacity. 60% capacity. So what I should do? I should, where 60% comes between 50 and 75%, right?
Yes, sir.
So it will be 5,60,000 plus what?
Plus
1,50,000 increase. In all, 7,10,000 is per annum. Okay, it's all per annum cost. If you notice, they given 5,60,000 per annum.
Yeah.
So plus 1,50,000 per annum increase in cost. In all, 7,10,000 rupees into 3 by 12 for 3 months. How much?
1,77,500.
Very good. What about the next 9 months? We are planning to work at what rate?
90%.
At 90% of capacity means, where does 90% come? Above 75%, right? Therefore, there will be another 1,50,000 increase in overheads. It will be 5,60,000 plus what?
3 lakh.
3 lakh. 1,50,000, another 1,50,000. In all, 3 lakh. So 8,60,000 is for a year into 9 by 12. How much? Around 2 lakh.
45,000.
It is 8,60,000 into 9 by 12, 6 lakh and
45,000.
45,000 is my semi-variable overheads. Is that clear?
Yes.
So guys, you have to first make this working note and then you can start with your cost statement. Just see the chart they made. Statement of cost and profit. Okay.
Yeah, cost and sales for the year 2013-14.
So I make a 4-column table. The column heads are particulars.
First 3 months, next 9 months total.
3 months and 9 months only a forecast, right?
Yes.
3 months already over. We are preparing the cost sheet for 3 months already over. Another 9 months yet to come. So 3 months, 9 months and what? Total. What is the first line?
Capacity utilized is
Very simple. I will tell you how to work out. Take a calculator, guys. 5,20,000 is a capacity maximum, right?
Yeah, max.
100%. So that into what you can do? We are going to operate at 60% capacity for the first 3 months. What you can do? You can do this way if you want to. 5,20,000 units into 3 by 12 into 60%. What they have done?
Yeah, same thing. 78,000 units.
Yes, 78,000 units will be what? Would have been produced and sold. Yes or no?
Yes.
At rupees 44 per unit. Remember, these are units already produced and sold. And what is the output expected in the next 9 months? 5,20,000 units into 9 by 12 into 90% capacity. How much you get?
3,51,000 units.
And that is the number of units of output that will be produced, and sold in the next 9 months. Is that clear?
Yes, sir.
Got it? That is the first working done. Next.
Next is direct material. At
Now we are going to
15
put down
rupees
all
per
the
unit.
cost in rupees, right? Direct.
Material.
15 rupees into 78,000 units. How much, ma?
11,70,000.
And 15 rupees into
3,51,000.
how much?
52,65,000.
Then add both and total column.
64,35,000.
Okay. Next, direct.
Wages.
Very important. We are promised the laborers rupees 9 per piece. It's a piece rate. 9 rupees per unit. But we also promise them their wages will not be less than 2,50,000 a month. Now let's take up the first 3 months, okay, Renuka?
Yes.
Tell me what is 78,000 units into rupees 9? You get one number.
Okay.
78,000 into 9 if you do, you will get around
7 lakh 2,000.
7 lakh and 2,000 is the amount as per what? Piece rate. But what is 2,50,000 rupees a month into 3 months?
7 lakh 50,000.
Therefore, you have to pay at least 7,50,000. It can't go below that, right?
Yeah.
Basically, whichever is what? Higher. That is the meaning. So, 7,02,000 or 7,50,000, whenever they give it can't go below. That means what? Whichever is what? Higher. Is that fine?
Yes, sir.
So, it is either 7,02,000 or 7,50,000. I take 7,50,000. What about the next 9 months? 3,51,000 into 9 will be more than 2,50,000 into 9 months.
Yeah. Yes.
3,51,000 into 9 rupees per unit. How much you get?
Sir, 31 lakh 59,000.
So that or how much?
31 lakh 59,000.
Or 2,50,000 into 9 months. Whichever is higher. I take the number.
Yeah,
and I put the total
22 lakh
values.
50 only.
Next.
So adding 7 lakh 50,000 for first 3 months and 31 lakh 59,000 for next 9 months. Adding both 39 lakh and 9,000 total.
That is your prime cost.
Yeah. No, that
that's a total of
wages.
wage. That's okay. Now get me the prime cost.
Prime cost is 19 lakh 20,000
Then
for first 3 months. Next 84 lakh 24,000 for the next 9 months. Then 1 crore 3 lakh 44,000 for the total.
And then now add overheads. They didn't say factory office, right? Add overheads under that first what? Fixed overheads. Very simple. We know we are paying 9 lakh and 60,000 factory rent for the whole year, right?
Yeah.
For 12 months. So what will be the rent for 3 months? Very simple. 9 lakh 60,000 into 3 by 12. How much?
2 lakh 40,000.
And that into 9 by 12.
7 lakh 20.
That is all. The next.
The next is variable at 8 rupee per unit.
That into 78,000 units.
6 lakh 24,000.
Rupees 8 into 3 lakh and 51,000 units.
28 lakh 8,000. And total 34 lakh 32,000.
And semi-variable overheads will be rupees what you got in the working.
1,77,500 and 6 lakh 45,000.
And then total
8 lakh 22,000.
Then next.
Total overheads.
Just add up all the overheads. How much?
10 lakh 41,500.
Next.
41 lakh 73,000. Adding both 52 lakh 14,500.
Very good. And then we place a total cost. Now how much you get for the first 3 months?
29 lakh 61,500.
Okay, wait. Let me complete the 3 months column alone first. My discussion, okay. And profit we can find out. Balancing figure. We know the sales are 78,000 units into 44 rupees. How much?
34 lakh 32,000.
The difference is a profit. How much you get?
4 lakh 70,500.
That is a profit you actually made in the first 3 months. April, May, June, that is the profit made by the company. Is that fine?
Yes, sir.
Now tell me, Renuka, what is the total profit needed? 15 lakh 62.
62,500.
From that minus 4 lakh?
70,500.
You'll get the profit that you want to make in the next 9 months. That's a target profit or desired profit. How much?
10 lakh 92,000.
That's it. Added to the cost to the 9 months.
So 1 crore 25 lakh 97,000 the total cost. To that add 10 lakh 92,000. So sales required for the next 9 months is 1 crore 36 lakh 89,000.
That is all here. You know the total cost is 1 crore 25 lakh blah blah blah. To that add rupees 10 lakh
92,000.
That is a profit you want to make anyway. So that your total profit is 15 lakh 62,500, right?
Yes, sir.
In all 1 crore 30.
6 lakh 89,000 required sales.
That is a sales, or that is the amount of revenue you should make by selling how many units?
3 lakh 51,000.
Therefore, divide rupees 1 crore 36 lakh
89,000
by 3 lakh and 51,000 units available for sale. How much you get?
39 rupees per unit.
That is a selling price per unit for the next 9 months. That means what? You have to sell the 3,51,000 units at rupees how much? 39 each. Is that okay?
Yes.
If you want to make a profit of 15 lakh 62,500 in that year.